Okay. Hi, everybody. Welcome. It's Thursday morning, 11 o'clock Pacific time. My name is Mary Macpherson. I'm the founder of Vantage Realty in San Francisco, but that's not why we're here. We're here to talk to Elbert Taylor with Farmers Insurance, and Elbert is also a broker who brokers other policies, and is a very good friend of mine. I've known him forever and ever, and he has helped most of my clients, almost, I think just about all of my clients, get their home insurance when others could not. And also joining us today, Stephen Barber with Guaranteed Rate. Stephen is a tremendous go-to agent for us and our clients, the oracle of all things related to loans. And Stephen has an extra added level of expertise with this because we work with a lot of people who struggle to find insurance, and he's here to provide some interesting color on this topic. So without further ado, Elbert, also known as ET, if you can introduce yourself, and then Stephen, introduce yourself, that would be great. Thank you.
Great. Thanks, Mary. And thanks so much for hosting this. I'm really happy to be with everyone today. And I am Elbert Taylor. And by the way, my friends call me ET. So a lot of people know me as ET, and I am an insurance broker with Farmers Insurance. I've been in this business for more than 20 years, which kind of makes me an old fart around. And I operate the agency with my wife, Lena, who a lot of our clients know her very well and prefer talking to her once they get to know her. And we've got a great team around us in Noe Valley, which Jonathan Fong, which brings us youth and technology. And we also have Spanish speaking with Jorge Nahera. But we've been servicing the San Francisco Bay Area and throughout all of California for more than 20 years, and really glad to be here.
Thanks, ET. Stephen?
Mary, thanks for having me. Stephen Barber, I'm with Guaranteed Rate Mortgage, and I've been in and around San Francisco doing mortgages for the last 25 years as well. So I would be in that same age category that ET was just depicting for us. Most of my business is in the Bay Area, but I have been doing loans throughout California as well. Thank you for having me.
You're welcome. Thank you so much, Stephen. Okay, since I think the majority of the 40 plus people on the call are real estate agents, a lot of people already are aware of what's been going on in California with regards to insurance, home, auto, personal property. But for the purpose of this webinar, we'll probably focus mostly on the home. So we'll get started without further ado. So ET, we get a lot of calls from our clients, panicked calls. I can't get insurance. My insurance has been canceled. My rates are going up. What options do people have when they give you a call like that?
Yeah, well, thanks, Mary. So we've been getting a lot of calls like that. We get calls every day from folks saying that their insurance has been canceled, and we also get those same kind of emails every week from farmers saying, "Here's a notice list of policies that are up for non-renewal." The first thing I tell people is, one, don't panic. Number two is take immediate action. Don't wait until the last minute to get involved. The first thing you want to do is contact your agent and see if there's any way that your insurance policy can be salvaged. Insurance companies are using technology today. They're using drones, they're using aircraft, balloons, and things like that. And I was reading an article, they've got 99% of every property in America, they've got an image on. And so there might be an opportunity for you to salvage it, and by making certain repairs to your home, clean off the roof, things like that, cut trees away from your house. So there's ways to solve it, but you want to contact your agent and then start doing your research and reach out to other brokers who have options.
Great, thank you. Let's talk about older homes for a minute. We get a lot of phone calls about clients who have things like knob and tube wiring. What kind of red flags would you advise us to look out for?
Yeah, the older homes are a real issue. Some of the most common things that we are seeing are roofs that have not been updated. So they may have a roof that's maybe 30 years old, and they said, oh, it's not leaking, so they don't need to replace it. That's a problem. The other thing that comes up really often for us are old circuit breakers. People have the old Pacific style block or Zenco, Sylvania circuit breakers that they have not updated. And that's a real problem. That's a deal killer for all the insurance carriers. So people have to do that. And the other thing is plumbing. So if you've got galvanized plumbing in a property, that's a deal killer for most insurance companies. And so making those little updates, even on an older property, will make a big difference and make it much more insurable.
Wow. Okay, thank you. Exclusions. What kind of exclusions should I be aware of in my home insurance policy?
Yeah, it's interesting. So, your basic home insurance policy is a special form, sort of an all risk policy. That means it's covered for pretty much everything that isn't specifically excluded on the policy. So that means there's lots of exclusions. And so the most common exclusion that we say that people just really catch people off guard is the water exclusion. And so water is excluded from policies, and then it's added back in under certain circumstances. And we get a lot of calls, especially during the winter and rainy season, where they've got maybe water penetrating the roof or water seeping in from their foundation and things like that, and they want to put in a claim. And they're surprised to find out in most of those circumstances, it's not going to be covered. And so we see that most often. And the other thing are breed exclusions. Lots of people have dogs and pets and things like that, and they don't understand that there are exclusions for certain breeds. And some you would be surprised with. German Shepherds, for instance. There is a exclusion for bulldogs. And yes, that also means French bulldogs. They don't distinguish. And so that means if your dog happens to bite someone and they're on that list, you have no coverage. And so it's really important for people to look and read their policy, get to understand it, and know what those exclusions are that may affect them.
Amazing. I've never heard of that. Just this week, some clients of ours closed on a home, and I know that there were some criteria that they had to meet post-close to, to keep up their insurance policy, like a water leak detector?
Detection.
What are some of those things that we should be looking at?
Yeah. So a lot of insurance companies are requiring that with farmers. If you've got an older home, you're going to be at a minimum, and it really depends on the replacement cost, but at a minimum, they're going to require you to have whole house water leak detection. And what that means, it's a device that's installed to your main water system, and it notifies you, one, if it detects a leak, and two, it shuts off the water supply. One of the biggest problems that we have with insurance is, other than wildfire, is water losses. And the water losses, especially in San Francisco, are a big deal. And so that's going to be a requirement. And depending on if your replacement cost is in excess of $1 million, they're also going to want you to have automatic gas shutoff for earthquakes. And then they want you to have burglary and fire monitoring. That means you're going to have to hire a company like ADT or one of the others. And if it detects a burglary or a fire, then it's going to notify you and also call the proper authority. So there's more things being done to help prevent loss, but it also is an additional requirement that people have to be aware of, and an additional expense right after closing.
Okay. Questions in from Jennifer Bronson, my friend in the East Bay. Jennifer says that Allstate announced this morning that they might resume in the state by offering a new California home insurance package. Does this bode well that other insurers will too, albeit at a higher rate, but better rates than the FAIR plan? And maybe while we're on that, can you talk a little about the California FAIR plan, what it is, and should clients consider it?
Yeah, so I hadn't heard about the Allstate situation. I think that as the insurance commissioner is starting to allow insurance companies to raise rates, and so they're going to gradually start coming in. Farmers has never stopped writing home insurance policies, but they did put a cap on it, and there has been talk that they're going to increase that cap, perhaps up to about 9,000 policies per month. So the California FAIR plan is a pool that was meant to be the insurer of last resort. But they're writing a lot of insurance in California, because in some of these areas where there's a higher fire risk, none of these insurance companies want to write in those areas, and they're still canceling policies. State Farm just came out, they're going to be canceling another 30,000+ policies. We're getting a lot of calls on that. So The FAIR plan's coming in. People get weary about the FAIR plan, but you know what? It's better than nothing, but it's getting a little bit better. Rates are actually getting a little better. I'm getting some rates back from the FAIR plan that are pretty darn reasonable. But the thing to know about it is that it's going to require more than one policy. The FAIR plan covers basic insurance. It's going to cover fire. It's going to cover smoke. If you can add vandalism on there and wind and hail and things like that. But what's not covered on the FAIR plan is liability, water damage, theft. So there's a ton of things that you're probably going to want in your insurance. So you're going to have to couple that with what we call a companion policy.
Okay, Stephen, this is a question for you then. And I'm sorry, we're going off script a little bit here. Guys, we have some predetermined questions we already had set, but this is leading to something else. If your home is not insurable by traditional means, if you're having just FAIR plan, or maybe you can't even insure a home at all, Stephen, what is a client to do if they're trying to get a loan?
If you have to have insurance. So if you can't get insurance, you can't get a loan.
And what about a FAIR plan insurance policy? How does that work?
The FAIR plan may be for the bank. The FAIR plan is just business as normal. Happy to say we just add together the policy premium for the FAIR plan and the wraparound, what's called the wraparound rest of the policy, which would be from farmers or whomever. And we just add the two together to be the total insurance cost as far as underwriting the loan. But defaulting to FAIR plan may be emotional setback for the buyer, but the bank doesn't blink an eye. It's just business as normal.
Okay, so ET, do I understand this correctly? If farmers won't offer, let's say, a traditional home insurance plan on a home, but the FAIR plan will cover what farmers won't, will farmers then do a secondary policy as a companion?
Yeah, good question, Mary. Yeah, as a matter of fact, they will. They're going to require you to have that FAIR plan policy. So we do have to upload the declaration of that FAIR plan policy in order to issue. But they will offer a companion policy to it. But it's still going to need those same requirements for whole house leak detection at a minimum, and then some of those other insurance requirements. We have access to other policies, hence there's where we put our broker hat on. So we can get other policies called a DIC or difference in condition policy to go with that FAIR plan that may not have those same requirements. And so we've done that for a number of our clients as well.
Okay, helpful, thank you. A question from Anna. Hi, Anna. Why are we seeing these knob tube roof water monitor issues as problems for insurance companies when in years past it was never a problem? Are insurance companies trying to ensure their claims are reduced for properties because they're not getting paid the proper rates in California, whereas before they had tolerances for these things, but the claims in recent years have made things so financially straining?
Yeah, that's correct. But here's the other thing that people aren't aware of. There's a little thing called inflation that's really hit the insurance companies very hard. So during the pandemic, the insurance commissioner stopped insurance companies from raising rates. And then once we all kind of got out of our houses and we start opening up again, claims started to skyrocket. And they did not allow the insurance companies to adjust their rates for inflation or to these claims. And so a lot of these companies became extremely unprofitable. With not just farmers, but State Farm, for instance, recorded their largest loss in company history, about $32 billion. And so they had to stop. They had to, one, tighten up underwriting to really want great properties that represent the lowest amount of risk. And so now they're just tightening up on those things. And so we have to kind of adapt to the times. And what I try to talk to realtors, you got to educate your sellers, your buyers on what the new requirements are. And if you're going to be selling a house, maybe you want to be proactive and update those boxes and eliminate some of those things that would act as barriers to selling your home.
Okay. E.T., can you talk a little bit about fire hardening? What does that mean, and what's a consumer to do?
Yeah, so we get a lot of that from some of our clients that are in some of these more fire prone areas. And so you get discounts for that. So if you're going to be updating your roof, you want to update your roof to maybe a metal roof or a tile roof that's more hardened. And a lot of people, instead of having the wood siding, they're getting fire resistant siding on their home. They're also clearing brush from around their home and getting a wide clearance for trees around their property. All those things make your help present loss and are more attractive to insurance companies. So fire hardening is a really important thing, especially if you're living in outside of San Francisco, or even sometimes in San Francisco. That's going to make your home more resilient and resistant against fire.
Gotcha. Thank you. Christine Ersfeld. Hi, Chris. She's asking, maybe a bit of a rabbit hole, but how do these insurance companies cover those losses and stay in business?
Well, you know what? That's the question. That's why they've stopped writing business. And so what we've been told, what they've told the Department of Insurance and these legislatures is that if they cannot raise rates or adjust their rating models to get more profit, they're not going to be able to stay in business. And so that's why they've slowed business. They have stopped writing business because if they don't tighten up their underwriting and stop writing business, they're going to be oversaturated in the event of a catastrophe. They won't be able to pay their claims. And I've been involved in several catastrophes where it was the Paradise Fire, the Santa Rosa Fire. We had clients in all those areas, and very proud to say that farmers paid those clients whole. Every cent of their dwelling, every cent of their contents, every cent of their additional separate structures and things like that, whether they had it or not, they paid them all. In the Paradise, it was something like 5,000 properties. They paid them all at one time. So they can't keep doing that unless they have an adequate amount of premium and stay in business.
Thanks, ET. A question from Tina Wong. Have you encountered any cases for any rental properties with breed restrictions? Landlords do not have rights to deny tenants emotional support animal based on the breed, even though insurance company does not cover certain types of breed. Oh, good question.
So, it's interesting. I had a client just talk to me yesterday about this. And so it's a real problem because again, he's buying new insurance this year. And of course, even as a property owner, what does it say? Oh, you need to sign this breed animal exclusion. They want nothing to do with dog bite. So I think from a landlord's perspective, you have to do your due diligence in terms of has the animal bit anyone, things like that, and perhaps have your tenant provide you with some sort of hold harmless agreement or something like that. It's something that's new that now they're trying to say that you have to allow dogs on properties, but insurance companies have these exclusions at the same time. And so I don't think the insurance has caught up to that. There is one carrier I saw that said, oh, we don't have a breed exclusion, but of course they're very small and they have a very, very small appetite.
Okay, that's super interesting. Thank you. Wow, boy, Tina, that's a good question. Just talk about earthquake insurance for a minute. I know that a lot of our clients ask about the next big one, and what should they do? And we show these condos, and some condos have earthquake insurance policies, some don't. The difference in HOA dues is, astronomical. What do you think about earthquake insurance, ET, and what would you advise?
A lot of our clients are buying earthquake insurance right now. The CEA is only one option. We have a couple of other options for private insurance companies that can give a little bit more flexibility in terms of costs, deductibles, and things like that. Whereas the California Earthquake Authority is really kind of cookie cutter. You have to have this. You can only have this amount of loss of use. You can have a small amount of contents coverage if you want. But a lot of our clients are starting to buy on the home and as individual condominium owners. We're starting to get inquiries from condominium complexes or HOAs, but the cost of insurance for those are really, really high. So there's not a lot of HOAs that are buying that.
Okay. I don't want to put you on the spot about that, but I always wonder, should we invest in that? And is it, is it prohibitive?
Well, here's my thought, just
Yeah.
on the earthquake.
Mm-hmm.
And a lot of people, should I get it? Should I not? I said, well, insurance is about comfort. If you feel more comfortable having earthquake insurance, definitely buy it. If you're in San Francisco, there's areas that have liquefaction. So, research that, know where the areas where there's liquefaction going on. We know a marina is one of them. I would buy earthquake insurance. I would find some way in my budget to buy earthquake insurance if I'm in one of these areas that's near a fault or near in a liquefaction area.
Okay, interesting. Anna said as a follow-up to that question about earthquakes or insurance, why do you believe this is increasing in recent months?
Because there's been so many earthquakes.
Oh,
So
go.
there's been earthquakes around the world. There's been earthquakes, near us here in California, and they keep telling us the big one's coming. And so, and I think that, our homes represent so much of our wealth. If your home is knocked off its foundation, you don't have a home anymore. And therefore, that's an absolute total loss. And so we saw that in the earthquake, was it the 1989 in the over in the marina where homes actually collapsed. So more people are interested in that because they want to protect their investment.
Gotcha. And forgive me, everyone, if you put a question in the chat, I will get to it, but we have questions that came in before the meeting started that I'll get to, so I'll go back and forth. E.T., so let's get to this question. How does insurance coverage work for temporary living expenses if my home is uninhabitable? This is crucial for people who face evacuation or whose homes are damaged by fire, floods, other disasters.
Yeah, that additional living expense is a really important coverage. And, I can tell you a story just really briefly. So we have a client I mentioned in Paradise, and Lena and I were in the office getting ready to wrap things up, and we got a phone call, and she said, hey, this is so-and-so, and I'm in Paradise, and I'm evacuating right now, and there's fire on each side of me, and I'm really scared. And man, it still sends chills up my spine. But Lena was on the phone talking her through it. Meanwhile, we were able to open up a claim for her and start the process going. How that coverage works is I told her, look, get somewhere safe and check into a hotel. By the next day, you have the up and running loss of use coverage. And so they pay for the hotel, they pay for her meals out. That particular client also took in a lot of her neighbors who she was evacuating with because they couldn't reach anybody. So that's an important coverage, and it covers also in wildfires where sometimes there's smoke going on and they're saying you have to be evacuated. So you have some coverage there for evacuation as well, with that loss of use. And so people don't really pay attention to it. A lot of times when we're quoting people, they say, oh, I don't think I need that much of this, or can we reduce that or take that away, or I can go live with my parents. Until you're in that situation where you're fleeing for your life and you need to go check in a hotel and you've pretty much lost everything. And that coverage becomes extremely important.
Wow. Okay, thanks, E.T. Let's get to some of the questions here. Oh, Stephen, thank you for pointing this out. Okay, for us real estate agents out there, we are now faced with whether or not to include an insurance coverage contingency when we write offers for our buyers. E.T., I would, what I do is before I call you and I say, this is the house, these are the clients, these are their dates of birth, their full names. Can we provide coverage for them? I'm wondering if you can talk about the pros and cons of this. And agents, if you want to chime in, please feel free. And then Stephen, if you have anything to add, I'd love to hear from you too about that particular issue. And then ET, what kind of a heads up would you like to get when an agent's trying to write an offer for a client and hoping to write as clean and competitively as possible and not have that insurance condition in the offer?
Yeah, well, we're getting more and more calls, and frankly, I'd say if I'm writing an offer on a property, you want to know, one, can I insure this property? Is it insurable? What kind of rate is it going to be? You'd be surprised how some properties, depending on where it's located, you'd be surprised that rate might be significantly higher than you might guess it to be. And so going in blind without knowing whether a place is insurable, whether there's claims on there that wasn't disclosed. What most people don't know is that depending on the replacement value of that home, if they have even one loss in a 5-year period, it may not be insurable by a lot of carriers, or they may require additional information in order to write that property. So running that preliminary quote just to get an idea if that property is insurable is really important. Also, if the replacement cost is a high value, meaning it's well over 100, $1.5 million, that requires additional underwriting time. And so knowing that right out front, maybe I need to have a week or two of insurance contingency is information that is valuable when you're in that process.
I mean, you're becoming almost a, it used to be, you write an offer for someone, if they needed a loan, you would provide to the listing agent, this is our loan agent, this is his information and his or her information. And sometimes that loan agent would even go so far as to preemptively call the listing agent and go, hey, my client, Sam Smith, is super well qualified, yada, yada. We may be getting to the point where you'll be calling on behalf of our clients saying, I can insure this home. I love these clients. It's going to happen, Anyway, another question from Haley. Hi, Haley. Haley is asking, what condition would prevent getting coverage from the California Fair Plan?
If the property is not in very good condition, even the Fair Plan they have restrictions. If the property is in poor condition, if there's trees overhanging the house, things like that, they don't want to insure it. So now, in order for us to get a quote from the Fair Plan, we have to provide pictures. We can do like a little preliminary quote now. They've enabled that. But in order to get a formal quote that we can bind, we have to send them pictures. And part of that picture is all the way around the house and the roof. So they want to see it. That roof's in good condition. When was it last replaced? Are there trees or brush up against the house? Things like that. And if they're not satisfied with the pictures, they say rejected.
Wow. Okay.
And just one more thing about that with the Fair Plan is that a lot of people don't really realize that the Fair Plan is actually run by insurance companies. And so they're loss prevention. They don't just want to insure a lot of properties that's going to cause them a lot of claims and then cause rates to go up for everybody else. So they're being a little bit more picky with properties.
Sure. Wow. Okay. Thank you. How can people reduce their home insurance premiums without compromising on coverage?
Mm-hmm. Yeah, I get this. That's another call we get every day. It's like, oh, I got my bill. What should I do? Why is I'm shocked. Why is my rate higher than last year? So the first thing I tell people is this. Let's look at your coverage. Let's look at your dwelling amount. Do we have an adequate amount of dwelling coverage on your house? Have you made any changes to your house? So insurance dwelling coverage is first. Do we have the right amount of liability insurance? I recommend, the max that we can write, whether that's $1 million or 500,000. Then let's look at the other coverages. I have a basic rule that I tell people: never insure that which you can afford to lose. That, not that you want to, but if you can afford a $10,000 deductible, what do you have a $1,000 deductible for? If you can afford, if $20,000 or $25,000 is not going to change your life, then you should have the higher deductible. And there's where you should save, whether it's home insurance, auto insurance, or anything that you're insuring. Don't insure that which you can afford to lose. So there's where you save money, but having the make sure you have the adequate amount of the important coverages, dwelling and liability. Everything else to me is optional, so that if you could reduce the contents coverage and on a farmer's smart home, we can reduce contents. There's other things that we can reduce on the policy, but don't sacrifice on the coverage, the important coverages, and self-insure for a higher amount.
That's so smart. We just reduced clients in a condo building, their HOA dues every month because we just raised the deductible, so we can get the
Mhm.
dues under. It was going to be like 530. We got the dues to 450, which, because you can't write off your dues and it all goes into the lender equation. When they're looking at what the client's overall debt's going to be, that those dues are a big deal. So anyway, thank you for that.
Yes.
What's the process for filing and settling a claim with an insurance company?
Yeah, here's what I tell our clients, and I would suggest this to everybody. If you think you have a claim situation, you need to call your agent first. Because remember, as I said, a claim on a property today, even a claim with a zero payout may prevent insurance. And so talk to your agent first. Say, here's my situation. Do you think this is worth, one, is it going to be covered? Two, is it worth putting a claim on? And some of our clients get upset when I say, you know what, I think you ought to not put that claim in. Well, what's insurance for?
Mhm.
And what I try to educate folks is the whole purpose of insurance is to help you get through the catastrophic event, not every event. And so contacting your agent first and letting them walk you through that process, I think, is extraordinarily important, because we get people that come to us that they may have had an $800, in fact, I've got a lady right now, she had an $800 claim, and she's been paying a $5,000 premium because of an $800 claim that she put in 4 years ago. And every year she's been paying $5,000 a year. That makes no sense. And you know what she says? Nobody ever told me that this would happen. And
Oh
so call
no.
your agent first. If you can't reach them, then you call the insurance company.
And if that woman switched to a different insurer, a different company, it wouldn't matter, right? It follows her around, doesn't it?
That we're working with her now. She's come in. In fact, she's been non-renewed, of course,
Mm.
and by Safeco. And so we are working to get her new coverage. But again, she's got 1 more year on that claim, so she's going to pay higher rates still. We were able to get a little bit lower, but still higher rates for 1 more year.
Wow.
And by the way, with Farmers, she's uninsurable.
Oh my goodness. Okay. Wow. Okay. ET, what legal challenges or new regulations regarding home insurance should people be aware of?
Yeah, there's lots of things being proposed to help us get out of this mess. And it seems like they should have been doing this proactively, like a year ago, because we've been really in this insurance crisis for a year now. And so what they've been proposing is allowing insurance companies greater flexibility. So a lot of people don't realize that insurance companies cannot raise rates without permission. So they have to file to the Department of Insurance. They have to show why they need an increase in rates. And then the Department of Insurance could either say, yes, you can have that rate, or, you can have it at a lower rate, or no, you can't adjust rates. And that's a problem, because it prevents them for capturing for those losses and staying profitable. And some of they're also looking at changing the models so that they can not just base rates on past history, but forecasted losses. And so a lot of talk about changing how they rate and offering more flexibility to help get insurance companies back into the market. But so far, it's all talk. And so nothing really has come into stone. The thing that's really going to get some of these insurance companies like Farmers to open up, and our sister company starting to, has promised to maybe start issuing policies for Foremost in the summer, is profit. Once they start getting their loss ratio down, they're going to start opening up. But as a lot of people, will see, that they've been granted rate increases, and those rate increases, and they've done, along with other things, those rate increases are starting to make them more profitable, and they're starting to come back into the market. But nothing solid yet that's really going to help this market in the long run yet.
Thanks, ET. Guys, I have 2 more questions for Elbert, but if you have any more questions, because we're already past the half-hour mark, please put them in the chat, and we'll get to them very quickly. So ET, my 2 more questions. One is, thinking about wildfires, floods, what should people look for in terms of their policy to make sure that they're adequately covered?
Yeah, so first, yeah, knowing that you're properly covered, the dwelling amount, they should be looking at that, every year you get your renewal, take a look at it. Building costs have gone up quite dramatically. Farmers and a lot of other companies are starting to really make changes to their cost estimators. And we're seeing pretty substantial increases in dwelling coverage, but it's really the client's responsibility to make sure you're properly insured. So one, making sure that you're properly insured. And that's the first thing. And then really understanding your policy, what's covered, what's not covered. Personal injury. A lot of times I'm reviewing policy and it has no personal injury coverage. That's a part of the liability that you really want to have. It broadens the definition of liability. And deductibles, just really knowing and understanding what your deductible is and making changes there. So having that policy review with your agent, or, we do a lot of policy reviews with folks that just want to look at their coverage, is super, super important. And eliminate the waste, like floaters, for instance. Some people have a lot of jewelry that they never wear on their insurance policy. So you know what? Maybe you can save a little bit of money by getting a safe deposit box for $50 a year rather than paying $800 a year for a piece of jewelry.
E.T., can you talk about the benefits of umbrella policies? It's a question from Cynthia Trina. Hi, Cynthia.
Yeah. So an umbrella, which a lot of our clients have umbrellas, it's a excess liability. So it goes over the top of all of your underlying liabilities. And, I've seen some payouts on these umbrellas. We had one client who, due to an auto accident, end up having a total payout last year of $1.25 million. That umbrella saved him. If he didn't have an umbrella, he'd be paying some of that money out of his pocket. And so our basic auto policy is $250,000 liability, and you've got your $1 million in liability on your home. The umbrella goes over the top of it. So if you have assets, I recommend people buy an umbrella. It doesn't cost that much, but we sell a lot of umbrellas. A lot of insurance companies have stopped writing umbrella coverage. So like Farmers has suspended their umbrellas because of the lawsuits. That's the other thing that happened right after the pandemic. We got out, we started having accidents, and people started suing each other like crazy. So they stopped writing umbrellas, but we do have markets outside of Farmers that we can write.
Okay, that's helpful. And a question, Stephen, for you from Christine again. Christine Ursula. Hi, Chris. What, Stephen, are you seeing with regard to loans? Are folks having to cancel contracts because of insurance, or escrows being delayed?
I haven't seen any canceled contracts. There have been some delays, and especially when a property was kind of hard to insure, and the insurance agency they found had allocations per month, for instance, where they would only do so many policies per month. Sometimes the escrow had to be pushed into the following month just because that insurance agency didn't have any allocations left for, they were closing in March, so they had to push to April or what have you. But there's always been workarounds, and I have several scenario questions that I'll toss at ET when you want, where I talk about like problems and how they worked it out.
Okay, that's great. Thank you so much, Stephen. And Claudia Siegel. Hi, Claudia. For ET, will the rates ever come back down once companies become more profitable? Haha, she said.
It's interesting. Right now we can't see it, right? Because they feel they don't have enough rate. So in the short term, rates are going to go up. I don't care what they say, rates are going up. And the Department of Insurance has granted more increases, and they promised to grant more. Every insurance company has applied for rate. And so, and then when they come out with this new rating formula, most likely we're going to see more rate. And so, but once the market actually, these insurance carriers start getting back into the market, and now we've got new companies that most people haven't heard of in the market. Maybe we'll see some segments start to actually become more competitive, and when we get more capacity. But right now we have limited capacity, and we've got rates that are ever increasing. And so the way to help mitigate some of that is higher deductibles and be smart about your coverages.
Okay. So we have 3 more minutes and we have 3 more questions, and we're going to do it rapid fire. Lisa
Mhm.
Miller says, hi, Lisa. Does Farmers insure homes that are valued over 3 million?
No.
What are the options for people over 3 million?
So for homes with a replacement value over 3 million, then we have to go through surplus lines. It's a much harder market. Most of the markets will cap out, like as Farmers will, they'll go up to 3 million. But when you go north of 3 million, that's a very tough market. And so we do have some surplus lines agencies, wholesalers that we work with that can accommodate that, but it is time consuming.
And
So
it's
think about a
asking,
contingency, you got to have that.
okay. And is asking with regard to some of these companies that we don't have maybe name recognition or people that we just know about, should we be worried about, those companies actually paying out in a time of crisis?
Well, that is the question. Yeah, I can speak for farmers. Farmers, I've been through catastrophes, I've been through fires, I've walked clients through, complete rebuilds. Some of these companies that we're issuing policies for right now, we don't have that same experience with. So that what I tell people is this: look at the financial strength of that company. You want at least an A-rated company, right? And most I think lenders, Stephen could probably speak to that. They want to see at least an A-rated carrier. If it's a B-rated carrier, they're less apt to want to, have those type of carriers. I would not want to put my insurance with a company that does not have good financial strength or ratings.
So again, then just consult with your own insurance agent for proper guidance, right?
Exactly.
A question from Dario. Hi, Dario, one of my clients. You've mentioned a 5-year period for past claims impacting a homeowner's premium in a few examples cited. Is the 5-year time frame just illustrative, determined by legislation or common industry convention? How much does recent claim history by prior owners impact future owners after a sale?
Yeah, very good question. It affects you. So now claims will follow the new buyer. So if you've had a claim, even as a renter, it follows you. If a property that you have a claim in, it's going to affect the buyer. So even if you can get insurance, it's probably going to be take a surcharge. So depending on your dollar amount. So all claims affect, and it's now the standard is 5 years.
And that's so an industry standard.
Yes.
Mm-hmm. Okay. Wow. Just for a little color, and I'm sure ET already knows this, I know Stephen does, in our disclosures, our seller disclosures, there is a question about, has there been an insurance claim on the property in the past X years? So, and that was long before all of this bad news. A question from Denise. Denise says, do you think insurance companies might provide something similar to a lender pre-approval letter that we can include with an offer confirming coverage?
Haven't heard anything about that. I don't think so, because, they might change your mind, because we're in a situation where things are changing rapidly. Where you've got, insurance companies that are going in and out of the market and things like that. Anything that they say today, for instance, we have a cap on policies. So if we hit that 7,000 policy cap, regardless if we've given you a quote or not, we can't issue that policy. And so I don't see that happening.
Wow. Okay. A question from Kelly. Kelly, I didn't mean to miss you. Kelly Smith asks, we are seeing agents not adding property managers as additional insured on the properties. Do you know why this is happening? She's seeing it more on single condo units.
Well, we have no problem doing it. Just as long as we understand. I wouldn't know why they wouldn't do that, but we have no problem getting it added. And just so so condos are another policy that we have to broker. So a lot of companies are not writing condo policies. We have access through our wholesaler and our wholesalers to condo policies. But I'm hopeful that this summer, Foremost is going to be back in writing some condo policies. But there's no reason you can't add an additional insured for a condo policy.
Okay. And then last question, because we're over time. So now building costs have gone up, right? And I think on the last meeting, I was on the phone with some other agents, and we were talking about 1,000 to 1,200 a square foot just to rebuild something. Now that those costs are rising, how do people ensure that their coverage limits are adequate to rebuild their house today? I mean, what
Yeah, that's a really
math
good
that you
question.
use, you know?
Yeah, so one of the tools that we have at Farmers is we have a building cost estimator that they're constantly tweaking and updating at least every month, and they have a new one now. And so what we can do is that when a client contacts us, we're doing a review and all that, is run a new cost estimator, especially if they've done some upgrades to their house, they've added some square footage. So contact your broker or agent, ask them to run a cost estimator tool to see what your replacement cost is.
Okay, thank you.
Mhm.
I'll call it for the day. I really appreciate your information. I'm going to share our screen now, so everyone has our contact information. There's a QR code there, but appreciate your time, your expertise, and I'm so grateful to have you guys on my team.
Oh, we appreciate getting the message out. Thanks, Mary.
Thanks, guys.
All right.
All right, there's our information, everyone, if you'd like to get in touch.